Welcome to Banking on Community, a podcast that explores how community banks thrive with the leaders who run them. I'm your host, Deb Barnes, a banking strategist and AI advisor with 18 years in banking and financial services. I help banks transform through data, analytics, and automation. It's a pleasure for me to introduce Stephanie So. She is the co-founder and co-inventor at Geek.io. Stephanie, welcome to the show today. How are you?
Fine. Thank you so much for having me here, Deb.
I'm happy to have you. Would you mind just giving a little intro to the audience about who you are and your company?
I'd be glad to. Thank you. This is an audience I'm not used to speaking to. I come from the tech world where we've been working on a interesting new kind of blockchain. Most people think of blockchain and think immediately of crypto. I like to say we're crypto adjacent. We're really the technology part. And our focus is in security, cybersecurity, really preparing the foundation for what people call digital assets.
Fantastic. And a little bit about your company. How did it get started and how's it going so far?
It's been very exciting. It's been quite a ride. We got started really as a research project. My co-founder and I were in academics and really are critical. We're quite critical people. He's an axiomatic mathematical game theorist. So what is that? That's a handful. Let's say it means that he won't stop until he gets down to the root of a problem. And a lot of the claims that were being made about blockchain and crypto seemed implausible. So especially the things that they were talking about bringing really important functions in the economy on these blockchain crypto rails were very concerning. And we might have been quiet about that if we hadn't found a solution. So we're not exactly beloved or embraced by the rest of the field, but I think we're more grounded than the rest.
Fantastic. So, and I failed to mention you have your PhD. Is it from, your PhD is in economics from?
University of Rochester.
University of
Yes.
Rochester. So yes. So you're economist and your co-founder is in economics, but you said a very specific part of game theory. So that's very interesting. And what specifically is your company doing, right? What are you doing in the market?
We have been working on this foundation. We started by taking blockchain, and blockchain says verify, don't trust. So they claim to be this new way of arranging market participants so there's less need for trusted intermediaries. And they say, well, everybody can access their accounts 24/7 and they can verify themselves instead of trying to go through layers of intermediaries. Well, as economists, we think there's a reason there are intermediaries in the market, and that's exactly to protect and perform these trusted interactions if they can do it well at scale.
Mm-hmm.
And so sometimes decentralization doesn't make a lot of sense if you can't serve a lot of people well at scale. So taking this kind of economic viewpoint, we started by taking out all the trust, just peeling back all the layers of how blockchains were promising that you could verify. But actually, in my opinion, the entire stacks, all of them, all the distributed ledger technologies, blockchains, there's something called DAGs, all depend on a lot of trust, and they haven't done their job yet, at least for financial speed.
Mm.
When we got through taking out these layers of trust, we got down to something called zero trust, where it's all cryptographically checked. And I looked up 5 years later and found out we had backed ourselves right into the this movement called zero trust security, which is a way that cybersecurity needs to change. And I could talk all day about that. And we have these use cases for cybersecurity that can help everyone. Everyone needs better security.
Yeah, definitely come from the banking industry. It's an ongoing, continuing concern of how to protect while also serve customers, right? So there's that balancing act between how much friction do I create for my customers and how much do I protect them? So, it's that ongoing balancing act to ensure the kind of integrity of the financial transactions in the financial system. So definitely understand that point of view. So here you are in the zero trust framework, and you have a company that's formed to do what? Like, what do your customers come to you? What kind of services do you provide, or is it the technology that you're helping them stand up? Can you share a little bit more about that?
Yeah, so we're still a startup, but we're really getting traction in telling, explaining, educating that there has to be an architectural solution, which we have. That let's take multi-factor authentication. Everyone knows the friction. That's a perfect word of multi-factor authentication. It's very painful. You have to have all your devices and passwords, and takes a lot. But the problem is that we've had multi-factor authentication around for a long time, and it still doesn't stop identity theft and account breaches. So what I've learned to say is multi-factor authentication asks you, the customer, to give up a lot of information to verify yourself to someone you don't know. You haven't verified who's on the other end. And that's the way we get tricked. We get sent to a different, a fake website, or there's something called help desk scams now. There are any number of phishing and quishing, which is QR code, and smishing, which is text message false links. All these ways to send people to the wrong place and give up their information because we don't know who's on the other side. And that's really painful for both a bank or any Fortune 500 company, small company, and their customers. So the message is that we don't have to rely on multi-factor. What we really need is mutual authentication. So I'm giving information to you only when I know that I'm at the right place. And that is a message that's getting out. And to make it easier and less friction than multi-factor, I think is going to be a big deal. And we'd like to help as many people as we can.
That's fantastic. I mean, it is such a reality. I think about, you mentioned some of the different types of scams people run into, and just having been in the banking industry, it's huge impacts of sums of money that can be, socially engineered, or these SMS campaigns in particular, even phone calls doing phishing. I mean, it's a huge amount of money for individuals who are getting impacted. And the banks are trying to do things like create friction in your Zelle. Like, we don't want you to send money through Zelle to a new participant, or we don't, there's all these things that they're trying to do to create friction. But to your point, they're not trying to say, here's how you can always know it's me. There's not an easy way for people to say, this is how for me, I'll say it's USAA, or it's, your bank on the corner, whatever your banking institution is. But there's not a way for me to say, no, I know it's not you. I'm not having this conversation. I'm out.
Right. And we can do that. It's an architectural issue because our systems just weren't set up for that. We trusted for so long, and that worked. But I was so proud of my mom the other day, because I've been telling her this every time I see her for 2 years. So her HOA changed management, and they sent her an email that said, you will be now having to sign into this portal.
Mm-hmm.
And she called the HOA, and I was so proud of her. But that is
Verify, right? Like, is this really the case? Is this a spam? Yeah, or is this a
yeah, yeah,
scam here?
yeah. So it's a pervasive problem. And when I got into this startup for a while, someone very smart told me, look for the problems that no one wants to talk about that are really painful, and solve those. And I think it's time we start talking about it now that there's a solution. I just don't think it's sustainable to say, well, we'll do the best we can with multi-factor.
Mm-hmm. And so your company has this solution that allows that two-way authentication.
Mm-hmm.
Okay, so tell us just a little bit about that solution.
We've made it as easy as possible. That's what I know from economics is if the cost is too high, people won't do it. so our solution is a blockchain solution. For those, to put it really simply, anything using blockchain requires you to have a cryptographic key. You think of them when you hear about wallets. So a cryptographic key that might be in your passkey, and a strength of that is it could be a quantum resistant key. It could be all of those words just mean it's encryption. I know you're nodding because you know this. And then this passkey, which could be small, it could look like a little USB key. Now I'm trying to remember what the question was.
No, I was just asking, how does this product work? Just at a high level, let's say, like if, and we can, like I said, we can always back up. So don't ever worry about
I was taking advantage of that.
It's easy to do, so don't worry. All I was asking is like, okay, so I guess maybe it's two parts. Who are you trying to get to adopt your technology? And then what will it do for them? So if it was, if banks or if whoever you're trying to say, hey, company, you should really adopt this technology, and this is what it'll do for you and your customers. So just giving that kind of in market view of it.
Thank you.
Sure thing.
So what this cryptography does is, first of all, it replaces passwords and devices with something that's good old tried and true encryption, which is the way you log in, except we've tried to water it down with passwords and things. But it's still the same kind of, for you technical viewers, it's an API call that you would put into your login page. And when the API call, that login is made by the customer, instead of going to some phone bank, which might have been hacked, or somebody else has registered with your phone. Okay, sorry to.
No worries.
It goes directly to a blockchain ledger, which has a couple of properties. One is our blockchain ledger is independently checked, so everything is very secure. That's not true with most. And secondly, banks can set up their own, or any enterprise can set up their own blockchain. And so it can be very private. Okay, so what does that do? It gives you a common reference that the bank can check, is this person correct? And the user can check, is this the right page for the bank? And all that happens under the hood, but it does that mutual authentication check instead of just going to, a call center where maybe they're not employed right now, or somebody has stolen the credentials. So having a ledger, a common ledger around, means with our security, you always know who you're checking. I don't know.
That's
if that
fantastic.
makes sense, but it's basically you can write a plugin in an API call.
Yeah, fantastic. So tell me a little bit about your target. So you said you're in startup mode. Are you working towards some major growth or, shifts? What's the next 1 or 2 years look like for you?
The next 1 or 2 years are loaded. We're talking to identity providers and cybersecurity platforms. We're trying again to make it as easy as possible. Actually validate this in the market with people who aren't using major identity providers, don't have the huge IT teams or help desks hardened so that everybody has to be on the same page at the time. That's not what blockchain requires. It means that you can sort of automate some things as long as it's secure. So actually, we would like to be an add-on or a modular piece of somebody's security if they're going to zero trust.
Makes sense. Okay, interesting. So how are you going about doing that?
Oh, I'm talking to a lot of cybersecurity people.
Yeah.
And I'm trying
How's
to
that
find
going so far?
It's going really well, honestly.
That's fantastic to hear.
Yeah,
fantastic.
Thank you. I think people understand multi-factor is a pain in the neck and multi-authentication is really what you need. So it took me years to get to that simple explanation. But
yeah, no, that makes a lot of sense. Okay, so what's the biggest challenge or constraint you're facing right now?
Limited resources, time, energy. People talk about cloning themselves, and I was so resistant to that, but I can see why people would be tempted. It's gearing up to be production ready and repeatable. I think that's a challenge. I think we have the education down, but not the distribution of the education.
Very good. And so what keeps coming up in your internal conversations that hasn't been resolved? You need to clone yourselves. What else?
And I'm afraid of doing that. It's marketing. It's marketing because I think when people think about cybersecurity, again, it's one of those things. Not a lot of people are motivated to move toward definitively unless they've just been hit. And the problem, for example, there's a well-known result in healthcare that you're most prone to cybersecurity attacks if there's been a merger announced. Because if there's a merger, the old IT team is sort of in suspension and the new IT team hasn't come in yet. And so then there's easy times to have things fall through the cracks and then gearing up. And so talking to someone at exactly the right time, that's something I'm trying to learn how to do.
Yeah, that's difficult. I mean, right place, right time is, the key to success, right? For all businesses, that's what you're forever trying to do is find that exact right place and right time.
Yeah. I've done my homework, but right now I'd rather be lucky. I'd rather be lucky than smart.
Yeah, that's so true, right? That's I'm looking for the magic luck here to come into the situation and get those partnerships lined up so that you find that alignment with another security provider. That's fantastic.
Yeah.
I'm curious. So we talked a little bit up front about blockchain is of course a big topic right now across the cybersecurity industry, but how do you see the trends in the industry going? So you talked about the zero trust movement.
Yes.
Are there other movements out there that kind of competing ideas, or what do you see as the key trends right now in this space?
In blockchain and finance specifically, I think people are really celebrating the new legislation. And in the crypto world, and I have very strong opinions here, Deb. So
let's go.
I don't mind if people disagree, but this is what I have to say from sort of an educator security point of view. The crypto world is extremely excited about the legislation, and the way they talk about it is, it's more liquidity. And that's exactly how they're looking at it. More naive liquidity to come in and purchase these assets. Well, the crypto world has not done a good job of making that secure and minimizing risk. We see hacks. I saw a hack earlier this year. It was $1.4 billion hack from the Lazarus Group. And there was some concern about it, but nothing has really changed, right? And the problem with that hack is that exactly the same hack by exactly the same North Korean hacking group had been successful taking down an Indian exchange the year before. And it's this problem that they haven't, I could go into a long, the security practices aren't there. So I'm very concerned that financial institutions right now are feeling the exuberance on the one hand and the pressure of moving to catch up with the rest of the world, to start using stablecoins and things like that, when there aren't the underlying technology is not secure.
Mm-hmm.
I'm just going to say
it's not as good as it needs to be.
It really isn't. So I can help. If anybody would like to talk to me, I'm happy to point out the problems. Give me a call. Yeah. Even though that's not where we're concentrating.
Yeah. Okay. So we talked about the kind of industry trends. We talked about your company and your goals. One of the things that, sorry, go ahead.
No, I wanted to say one more thing, if that's okay.
Go right ahead. Yeah.
Institutions, I think, not only do they have the accounting and reporting and compliance, they have regulators who don't necessarily know what has to be done for safety in the United States, because some legislators and regulators are so pro crypto. So I think there needs to be a cross industry effort that's reasonable, non-ideological, sort of reasonable in the cybersecurity space. And the other thing is, one thing that's not mentioned is custodian policies. And that's a huge issue.
Can you speak up just a little bit?
Yeah. Custodianship is a very, very difficult issue. So yes, please buy insurance.
Yeah, for sure. Oh my goodness. Okay, so what's coming? Like, what are things that people don't even know about that are coming in the blockchain, cybersecurity, crypto space? Like, what are those next set of problems? I mean, it sounds like we have plenty of current problems, but it's like right now, in my space, my background is in AI and analytics and such. And so scale, you talked about scale at the beginning. The scale of things is getting exponentially larger in terms of ability to potentially hack, potentially like those capabilities are becoming stronger and fiercer on the counterpoint side. Is that something that is top of mind for you? Are there other like emerging trends that are coming that you think need more attention?
I'm right there with you. I'm right next to you about the AI adoption, again, without the cybersecurity concerns. Fortunately, it's something that is a version of what we can solve, because what we really want to do, from my point of view, is not let AI agents specifically loose in our systems without knowing which one they are. Are you this one that I'm talking to, or are you the 50th clone? Right? Mm-hmm. Because they might look the same otherwise, but I want to know which one is working for me and what the information they have. I want to know the information is locked down and permission. And since we're talking about deep fakes and identity and customers, it's the same thing for me. You give an AI agent an identity. That way you hold the person who's running it accountable.
Mm-hmm, mm-hmm.
So you make sure they're all in this permission structure. So I actually see hope there. But it all comes down to accountability and being able to put in place rails that are adopted by the people who want to lead, frankly.
Mm-hmm, mm-hmm. Okay, so to kind of wrap us up, any final thoughts? Something that we should have talked about that I didn't ask you about?
Oh my. Yes, my final thought is that we're all taught, and this is still true in real life, we're all taught to give the benefit of the doubt, be kind. You don't know what's going on in someone else's head. And I'm all for that when it's person to person. But we can't do that anymore online because we don't even know if your friend's account is still controlled by your friend, right? So that's what I mean by going to a zero trust posture. It's not that you're a bad person. It's that
I don't know who you are.
you don't, and it could change from moment to moment. So if everybody does a small bit of self-protection and tells everybody else they care about to do it too, I think that's the smoothest way forward. So zero trust sounds terrible. Like, oh my goodness, how are we going to live in a society like that? It's the digital life that has to be.
Yeah. No, I think that makes a lot of sense. Thank you so much for that insight. So we talked a lot today about both just what blockchain is, this idea of moving from multi-factor authentication to truly, dual authentication. We both need to say who we are in the situation so that we can be sure of that trust.
Yes.
And that the exchange, whatever exchange we're going to make, whether that's financial or information or otherwise, is safe and secure, and that you and Geek.io are out to get that kind of capability integrated into more security systems going forward. What an exciting topic. And I think, it's not just, so for me, I'm coming at it from the banking angle, but it's really for everybody's, personal protection as well, to be thinking about that kind of level of protection. And, just to your point, asking that question, how do I really know it's you? Okay, I can actually, your example with your mom, I can actually call my HOA. I know their phone number. I can call them and see, is this really happening?
Right.
I think in the banking sector, we often say, look, we're never going to call you. So if you ever get a call from us asking for your information, it's a no, right? Like, hang up, call us directly if you have any questions, because people are going to try and scare you into doing something, you shouldn't do.
Yeah.
It's an emotion. It's interesting because it's such an emotional play, and it's a technological solution. It's kind of an interesting dynamic.
I know. And yes, and social engineering is really trying to target you, make you a victim. And let's not be victims.
Yeah. Let's not be victims.
Ask first.
Yeah. How do I know? How can I prove it that it's really my bank, my insurance company, my whoever who's trying to get information from me or get me to do something?
Well, I'm now starting to say it's not your job to prove who you are to anyone. It's their job to prove to you.
Yeah.
That
right on. I think if everybody just has that mentality a little bit more, just having that mindset will make people a little bit more safe in how they interact, with the world around them.
Yeah. And I think the leaders in security, the leaders who care about serving their customers, they will step up. I think that's what they want, right?
Yeah, absolutely. Yeah. Absolutely. Well, thank you, Stephanie, so much for being on the show today. I think we've had a great chat about this technology. This and the general blockchain and crypto space is, of course, a very hot topic in the financial services industry and at large. So it's great to have someone on with your background and with your inventiveness, who have actually tried to solve this problem, not just admire it. We talk about admiring problems. It's a very good looking problem, but sounds exciting to hear, some solutions in play that could really start to change things for society at large if they get put in place.
Thanks so much for letting me share again.